trading on the outcome of elections, sports, and economic data is no longer just the domain of Wall Street insiders or offshore bookmakers. Blockchain-powered crypto prediction markets are now processing tens of billions in volume, and that shift is rewriting who gets to participate and who profits. The real story isn't just the surge in activity. It's how smart contracts and decentralized oracles are automating trust in ways traditional systems can't replicate. This changes everything from risk hedging to political forecasting, and it's drawing massive capital from both retail traders and institutional players. Polymarket alone recorded $25.7 billion in trading volume in March 2026, a figure that underscores the accelerating adoption of crypto prediction markets. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Behind that number is a deeper transformation. These platforms allow anyone with a wallet to bet on real-world events using stablecoins like USDC, with payouts enforced by code, not intermediaries. When you buy a share in a "Will X win the election?" market at 70 cents, you're effectively pricing in a 70% probability. If the event resolves in your favor, the smart contract pays out $1 instantly, no disputes, no delays. That efficiency is why platforms like Polymarket, Augur, and Omen are becoming go-to venues for real-time event pricing. The mechanism powering this shift is on-chain event trading, where blockchain transparency meets automated settlement. Unlike traditional bookmakers, these systems eliminate counterparty risk. Funds are locked in escrow via smart contracts until a result is verified. Decentralized oracles like Chainlink or dispute resolution networks like Claro's feed real-world outcomes to the blockchain, solving the critical oracle problem: how off-chain data enters on-chain systems reliably. This infrastructure enables truly permissionless markets. On Augur, anyone can create a market. On Omen, users launch events without central approval, making these platforms resilient to censorship and accessible globally. But the most surprising evolution is how deeply these markets are now embedded in DeFi. Prediction market positions aren't just speculative tools, they're becoming financial assets. Reports from BitGet confirm that positions on platforms like Polymarket are now being used as collateral in DeFi lending protocols. That means your bet on a sports outcome could back a loan, unlocking yield from what was once pure speculation. This fusion of prediction market DeFi creates new incentive loops. Users earn yield on open positions, and protocols gain fresh asset classes to collateralize. It's a feedback loop driving liquidity deeper into the ecosystem. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The institutional response has been decisive. Intercontinental Exchange, ICE, owner of the NYSE, has poured over $600 million into Polymarket, not just for equity, but for access to real-time sentiment data. The CME Group has followed, launching regulated event-linked derivatives that mirror on-chain pricing. This convergence suggests a future where Wall Street doesn't just watch crypto prediction markets, it trades on their signals. The line between decentralized betting markets and traditional finance is blurring fast. Still, the rise of global prediction market access comes with unresolved tensions. Regulated platforms like Kalshi require KYC and settle in dollars, creating a parallel system that contrasts sharply with DeFi-native, anonymous venues. While blockchain prediction platforms offer transparent event trading and open participation, regulators are watching closely. The CFTC has noted potential for on-chain weather or crop event contracts to serve as hedges for farmers, but that doesn't mean they'll tolerate unlicensed gambling. The real test ahead is scalability versus compliance. Can decentralized oracles in prediction systems maintain accuracy at scale? Can platforms like Augur and Polymarket maintain their edge as institutional players replicate their models on regulated rails? The data richness of on-chain records gives analysts unprecedented insight, but it also invites scrutiny. What matters now is not just the volume, but the velocity of integration. The next signal to watch is whether prediction market collateral becomes standardized across DeFi, or if regulatory pressure forces a split between compliant and decentralized ecosystems. Crypto have proven they can price reality. The question is whether they can survive success. The technology is here, the demand is proven, and the infrastructure is live. This isn't speculation. It's the new mechanics of market truth.